Hey everyone, ready for a deep dive into real estate investing?
Always.
Today, we're going to be looking at some marketing stuff from a company called Smart REA.
Okay.
They make software, right, that says it can analyze potential real estate deals,
Right.
like super fast,
Interesting.
and helps investors avoid those shady proformas,
Right. Right.
ones that sometimes make a bad deal look good on paper.
Yeah. Happens all the time.
So they say their software can do all this analysis in minutes, not like hours or even days.
Really?
Sounds pretty amazing, right?
Color me intrigued.
Yeah, me too.
Yeah.
But before we get too far, I think we got to make sure we're all on the same page
Agreed.
about what a pro forma actually is.
Absolutely.
Yeah.
Yeah, for sure. A lot of people, especially those new to real estate investing, get caught up in the excitement,
Oli.
They see dollar signs and skip over the important details.
Makes sense.
But at the end of the day, you're not really buying a building when you invest in a property. You're buying an income stream.
Yeah.
And that's what the pro forma is all about.
It's projecting that income.
Exactly, and figuring out all the things that impact it.
So it's not just about how much rent you can get each month.
No way.
There's more to it.
Way more. You got to think about vacancy rates. I mean, you're not going to have a tenant every single day, right?
True.
And then there are all the operating expenses.
Well, right.
Property taxes, insurance, maintenance, maybe even utilities. Depends on the property.
Okay, yeah.
And of course, financing costs if you're using a mortgage.
Right, of course.
All these things eat into your profit.
So Smart REI is saying they can help us see through all that and get to the bottom line.
That's the pitch, yeah. They're saying they can calculate the true value of a property.
That's a pretty big claim.
It is.
They're also talking about like accurate profit projections,
Right.
analyzing different financing options and figuring out how fast your equity will grow.
And all this while being able to compare different properties side by side.
It does sound pretty good. They even go into some pretty serious technical details.
Oh, yeah. Like what?
Like, did you know it's built on Google Sheets? They
Interesting.
talk about lines of code, deviation thresholds for their calculations, even average runtime. I'm not sure if I should be impressed or if it's just, jargon.
It's always a bit of both, isn't it?
Yeah, probably. What do you think?
I think the Google Sheets thing is pretty interesting, actually.
Yeah.
If they've built a good tool using a platform most people already use, that could save people money.
Right, compared to those other software packages.
Exactly. Could be a game changer for investors on a budget.
True. As for the other technical stuff, well, some of it matters more than others.
Yeah, I mean, lines of code doesn't tell you how good the software is.
Right. Just means it's complicated.
Could be a mess, even. But that deviation threshold, that's interesting. Well, the lower the threshold, generally, the more precise the calculations are.
Makes sense.
But we need to see how these features actually work, not just the marketing hype.
Okay, so let's get into the details then. The source material actually walks us through a sample scenario.
Oh, cool.
Using their software.
Okay.
So maybe we can walk through it together step by step.
Sure. Sounds good.
And see if this software can actually do what it promises.
Let's see if it lives up to the hype.
Okay, so they start by having you enter some basic information about the property, like the address, the size, and how much you're going to pay for it.
Okay. Pretty straightforward.
Right. But then they start talking about this this sale reversion value.
Yes.
What is that exactly?
It's basically how much you think you'll be able to sell the property for
Okay.
at the end of, your investment period.
Got it.
It's a key part of a pro forma because it represents a big chunk of your potential profit.
Right.
But it's also one of the hardest things to predict accurately.
Yeah, I bet.
Smart REI says they use a couple of different methods to estimate this.
Oh, okay.
Either a simple growth rate or something called a cap rate method.
Interesting.
It'll be interesting to see how much control the user has over these assumptions.
Yeah, makes sense. It's like trying to predict the future, which is, well, never easy.
No, it's not.
All right, so we've got our basic details about the property. What's next in this walkthrough?
Next, they have you enter all the financing details.
Oh, right.
Things like the interest rate on your mortgage, how much you're putting down, all those fees you have to pay to get the loan.
Okay.
And this is where it can get really interesting.
How so?
Because how you finance a property can have a huge impact on its profitability.
You mean like getting a lower interest rate can make a big difference?
Exactly. But it's not just the interest rate.
What else?
The length of the loan, how quickly you pay it down, all these things play a role.
Huh.
Different loan structures can totally change your cash flow projections and your overall return on investment.
Interesting.
So having a tool that can help you model those different scenarios, that can be really valuable.
I see what you mean. You've definitely piqued my interest. I'm ready to see how Smart REI handles this whole financing thing.
Okay, let's dig in.
What do they have us do next?
They start getting into the nitty-gritty of income and expenses.
Okay.
This is where you put in things like the monthly rent, the vacancy rate, and all those operating expenses.
Right.
They even have you put in an operating expense escalation rate.
What's that?
Basically, assuming those expenses will increase over time.
Makes sense, yeah, with inflation and everything.
Exactly.
But I gotta admit, all this number crunching is making my head spin a little.
I hear ya.
And then they start using terms like discounted cash flow and equity dividend.
Ah, yes.
I'm not even sure what those mean.
Don't worry, it's not as complicated as it sounds.
Can you break it down for us, in a way that even I can understand?
Of course. Let's unpack those terms and see what they're all about.
Okay, lead the way. I'm all ears.
So discounted cash flow, or DCF, it's a way to figure out how much an investment is worth today,
Okay.
based on how much money you think it will make in the future.
Right.
But the thing is, $1 today is worth more than $1 tomorrow.
Yeah, I guess so. Inflation and all that.
Exactly. So DCF takes that into account
Okay.
by discounting those future cash flows back to their present value.
Using a what?
A discount rate.
Okay.
The higher the risk, the higher the discount rate.
So those future dollars are worth less today if the risk is higher.
Exactly.
Got it. What about this equity dividend thing they mentioned?
Right.
Is that like getting a dividend from stocks?
Kinda, yeah. In real estate, the equity dividend is basically the annual return you're making on your initial cash investment,
Okay.
sometimes called cash-on-cash return.
Cash on cash return. So let's say you put down 20% on a property, right?
Sure. Okay.
The equity dividend tells you what percentage return you're getting each year on that down payment.
Ah, I see. It's a good way to see how well your cash is working for you.
So it's not just about the total profit, but how hard that down payment is working.
Exactly.
Okay, so we've put all this information into the software. The price, the financing, the income, the expenses. What happens next?
Right.
Does it, tell us to buy or sell?
Well, not quite that simple, but it does give you a bunch of reports and metrics
Okay.
to help you analyze the deal. Things like internal rate of return.
IRR.
Yeah, and net present value, NPV.
Right.
And those ratios and yields we mentioned earlier.
So what do all those acronyms mean?
Don't worry, I won't give you the whole finance lecture.
Okay, good.
Just think of them as different ways to look at the investment.
Okay.
IRR, for example, is like an overall grade.
For the whole investment.
Yeah. It tells you the annual rate of return you can expect over the life of the investment,
Okay.
taking into account the time value of money, of course.
Right, of course.
A higher IRR usually means a better investment.
So what should we be aiming for? Is there a good IRR number?
There's no magic number, really. It all depends.
On what?
On your risk tolerance, your goals, the specific market.
Makes sense.
But generally, an IRR above 15% is considered pretty good for real estate.
15%. Okay. But I guess the higher the IRR, the higher the risk.
Usually, yeah. Risk and reward go hand in hand.
Okay, got it. What about NPV? What is that all about?
Net present value.
Yeah.
It's basically saying, if you invested your money today, how much profit would you expect to make?
Okay.
In today's dollars, after considering all the future cash flows and the time value of money,
Right.
if the NPV is positive, it means the investment is expected to be profitable.
If it's negative.
Negative, you'd be better off putting your money somewhere else.
Okay, makes sense.
Yeah.
So Smart REI does all these calculations, gives us these fancy metrics, and then it's up to us to figure out if it's a good deal or not.
Pretty much, yeah. It's a tool to help you analyze the numbers. It doesn't predict the future. You still need to use your own judgment, your knowledge of the market, your understanding of the property.
And the risks.
Exactly.
Makes sense. We've covered a lot here, from understanding what a pro forma is to all these technical details.
It's a lot to take in.
It is. And it feels like we've only scratched the surface.
We have, yeah.
What else does this software claim to do?
Well, they mention other features like calculating equity growth.
Well, exactly.
It shows you how your ownership in the property grows over time.
As you pay down the mortgage.
Exactly. They also talk about quickly duplicating proformas, changing assumptions, comparing different properties.
That sounds useful.
It could be. especially if you're looking at a lot of different deals, trying to decide where to invest.
Yeah, being able to tweak the numbers and see how it affects the profitability,
Hmm.
that'd save a ton of time.
For sure. But let's not get ahead of ourselves.
Okay.
All software has limitations.
Right, right.
Even the best tools are only as good as the information you put into them.
Makes sense.
And they can't perfectly predict the future.
True, true.
There's always risk in real estate.
So what are some of the pitfalls we should be aware of?
I think one of the biggest dangers is relying too much on historical data.
How so?
Well, the real estate market goes in cycles, right?
Right.
What worked in the past might not work in the future.
Ah, okay.
Interest rates change. The economy can go up or down.
Yeah.
Unexpected things happen, like, a pandemic.
Right, right. No one saw that coming.
Exactly. The software can't predict these things.
And neither can we.
Nope.
So it's like using a map that's a little out of date.
Haha. Yeah, that's a good way to put it.
You might get the general direction right, but you can still hit some detours.
Absolutely. And then there's always the possibility of user error.
All right.
If you put the wrong info into the software or your assumptions are off, the results won't be accurate.
Makes sense.
You got to understand the market, the property, and everything that can affect profitability.
So it's not just about plugging in numbers and letting the software do the thinking.
No, not at all.
You have to be involved, question things, double-check the results.
Use your brain.
Exactly.
Yeah.
Smart REI can be a great tool, but it's still just a tool.
Right.
We have to use it wisely.
Couldn't have said it better myself.
Okay, so we've looked at the features, the good stuff, the potential problems. We've walked through a scenario, looked at the numbers and all these financial metrics. But there's this one thing they say in their marketing that I want to dig into a little more.
Oh, yeah. What's that?
They say Smart REI works in all counties,
Right.
which made me think. What about international real estate investing?
Yes.
Can software really handle all the differences between countries?
That's a really good question.
Right.
It shows how even the best software has its limits.
Yeah.
Even though Smart REI lets you adjust for things like taxes, international real estate is a whole other world.
I can imagine. Currency exchange rates, legal systems, even cultural stuff. Those things could really mess up those calculations.
You got it. Different languages, legal systems, politics, and totally different markets.
Wow.
Even basic things like property ownership laws, how tenants and landlords work together.
Right.
It all changes from country to country.
So while the software might be great with numbers, it can't replace actually knowing the local market.
You need more than just a spreadsheet when you go international. You got to really understand the local market, the culture, the laws.
Right.
Find experts, lawyers, advisors who know that specific region.
This deep dive has been really eye-opening. It's so much more than just looking at the price tag.
It is.
But it's also cool to see how software like this can help.
For sure.
Give investors the information they need to make smart decisions.
Absolutely. We've gone through a lot today.
We have.
From pro forma basics to some complex stuff.
Yeah.
Hopefully everyone listening has a better understanding of the tools and strategies for real estate investing.
It's a fascinating world.
It is.
But complicated.
Sometimes, yeah. Remember, it's not about finding some secret formula.
Right.
It's about learning and getting the resources to confidently evaluate deals.
Well said. But before we wrap up, there's one last thing. Smart REI talks a lot about comparing properties based on yield to get the most return.
Makes sense.
But it makes me wonder, should profit be the only thing we consider?
That's a great point. Something all investors should think about.
Yeah.
Real estate decisions affect communities, people's lives.
True.
We have to consider the social and environmental impact of our choices.
So while we're looking at the numbers and trying to make money, we should also remember to invest in a way that benefits everyone.
Absolutely.
Not just ourselves, but the communities we're part of. Something to keep in mind as you explore real estate investing.
Couldn't agree more. Investing wisely isn't just about financial gain. It's about building a future where everyone benefits and where sustainability is a priority.
Perfectly put. Thanks for joining us on this deep dive, everyone. Hope you learned something and maybe got some new ideas. Until next time, keep exploring, keep learning, and keep investing wisely.